What are the arguments for increasing the fundamental components for increased future returns? Jacob, the rental yield's going up because everybody's homeless and the government's going to pay me to house them, right? Jacob, the capital gain is going to rise because I know they're building a shopping centre close by with a street and lovely schools and the place is booming. Right? Okay. The point is, what do you do with the earnings? Okay. So in companies, they can reinvest it to generate future income generated by productivity. Okay. So this is the argument about if I give the company my dividends, they say, Jacob, we can compound this at 20%. This is Warren Buffett, right?
Yeah.
Why should I give you, Jacob, my dividends, your dividends, when I can compound it for you at 20%? Just leave it with me, right? That's Buffett's argument. The thing we talk about with property is buying existing property is not productive. All you're doing is paying more for an asset, okay? In property, can you reinvest the rental income for greater growth or raise the rent higher than the inflation rate? Okay.
To a point, you can raise the rent to a point.
Yeah. Well, you can raise the rent. It's just whether you get a tenant that pays it.
Exactly.
Right?
Yeah.
But also, too, this is what we were talking about before in the last episode. I think inflation's going to stay high for a while. That's going to reduce your returns. Right? And that's why we sort of talked about being a little bit more nimble and dynamic in all markets, property, stock, gold, whatever, because inflation's going to eat away your return.